Safemoon at risk of a 61% dip. Crypto new media. Bulls need to break above the 20-day simple moving average to avoid more losses. Safemoon is trading around $0 time of writing, with data from CoinGecko showing that the token's price has gained by 3.6% in the past 24 hours. However, despite turning green on the day, Safemoon has not shaken off the bears, and the constricting descending triangle pattern suggests the next move could be a dip to critical support levels. An upward move, on the other hand, could see bulls seek fresh gains towards $0. Safemoon technical outlook. Safemoon has an intraday range of $0. Bulls seek to bounce off the descending triangle support line at $0. The daily chart shows that Safemoon has traded within a descending triangle pattern since the breakdown from highs of $0 the 19th of May. The pattern presents a bearish outlook that threatens new losses. We have the daily relative strength index below the 50-point line, while the daily moving average convergence-divergence line is in the bearish zone. Lackluster volume and the sloping curve of the 20 SMA are also presented as a bearish factor for Safemoon price. If the price turns lower and slides below the support trend line of the descending triangle pattern, bulls face a 61% decline. This would take Safemoon below support at $0, opening up losses to lows of $0, the 127.2% Fibonacci retracement level at $0. Safemoon price daily chart. Source: TradingView. If the upside seen in morning deals this Tuesday continues, there are chances bulls might test the resistance level at the 20-day simple moving average at $0. The token's price could then move towards a horizontal resistance line at $0. A breakout above the trend line of the descending triangle pattern likely fuels fresh interest. The next barrier is at the 50 SMA, with the main target then being the 78.6% Fibonacci retracement level at $0. Metagenomic sequencing market size worth $1,353.28 million globally. By 2028 at 6.35% CIGR. Verified market research. The major applications of metagenomics in numerous fields, diverse initiatives and financing from government and private agencies for large-scale sequencing projects, and the lowering cost of sequencing are all driving market expansion. Verified Market Research recently published a report, Metagenomic Sequencing Market by Workflow, by Product and Services, Reagents and Consumables, Instruments, Services, by Technology, by Application, and by Geography. According to Verified Market Research, the global metagenomic sequencing market size was valued at $827.55 million in 2020 and is projected to reach $1,353.28 million by 2028, growing at a CIGR of 6.35% from 2021 to 2028. Global metagenomic sequencing market overview. One of the major factors driving the growth of the metagenomic sequencing market is the continuous development of faster sequencing techniques and advancements in various methods to deal with the massive amounts of data generated, which are increasing researchers' ability to analyze microbial communities from an infinite number of environments. The increasing use of advanced bioinformatics tools, high-throughput screening methodologies, drug recovery, and the development of cost-effective technologies such as next-generation sequencing are driving market expansion. The advancement of next-generation DNA sequencing technology has fueled molecular biology research, resulting in numerous discoveries and fresh insights. As a result, rising technological breakthroughs in DNA sequencing are likely to drive market growth throughout the forecast period. However, several factors are impeding market growth, including growing concerns about the standardization and accuracy of diagnostic testing, the need for parallel advancement in various isolation and identification techniques, more efficient and robust bioinformatics tools, and a shortage of skilled professionals. Key developments in metagenomic sequencing market. In March 2019, Lundbeck Foundation Geogenetics Center and Illumina worked together to create one of the most extensive ancient genome collections. This collaboration will also aid in the investigation of the evolutionary history of specific mental and neurological illnesses and infectious microorganisms. In January 2019, KingMed Diagnostics and Illumina collaborated to co-develop oncology and hereditary disease testing applications using Illumina's NGS technology. The major players in the market are Illumina, Inc., Thermo Fisher Scientific, Inc., QIIGN&B, PerkinElmer, Oxford Nanopore Technologies Limited, BGI Group, Macrogen Inc., GNEWIZ, Eurofins Scientific, Novogene Corporation. Verified Market Research has segmented the global metagenomic sequencing market on the basis of workflow, application, technology, product and services, and geography. The latest Tether report says USDT is 10% backed by cash. Key takeaways. Tether has published a new assurance report detailing the composition of its financial reserves. Those numbers suggest that USDT is backed by more than 50% cash equivalents, including 10% cash and bank deposits. The report was conducted by the auditing firm Morkaman. Share this article. Stablecoin company Tether has published a new assurance report detailing the composition of funds backing its USDT stablecoin. USDT is 10% backed by cash. Tether's USDT token is backed by the US dollar, meaning that the stablecoin firm must keep a reserve of funds in its possession equivalent to the value of USDT tokens in circulation. However, the firm has been criticized due to the fact that it backs the token with financial assets other than actual US dollars. This week's report gives a breakdown of Tether's current reserves. It says the company has $62.8 billion in assets. Roughly $6.3 billion of those assets are actual cash and bank deposits. That means the USDT token is 10% backed by cash by any definition. That figure is a significant increase from Tether's May assurance report, which indicated that 3% of assets were cash. This week's report also indicates that USDT is backed by substantial cash equivalents, including commercial papers, certificates of deposit, reverse repurchase notes, and treasury bills. Those assets, excluding the above cash and bank deposits, amount to $47.1 billion, making up well over half of Tether's total assets. Tether's remaining assets include secure loans, corporate bonds, funds, and precious metals, and other investments including digital tokens. Tether attracts criticism. Tether has historically attracted criticism for failing to provide audits of its cash holdings. It is not clear whether this report will satisfy critics, as it is an assurance opinion rather than a proper audit. And like other cryptocurrencies, a fully independent audit of Tether may not be possible. Transactions involving USDT can be tracked on the public ledgers of various blockchains, but it is impossible to manually verify each token's backing manually due to the fact Tether's collateral exists in private accounts. The report published this week was created by Morkaman, a Cayman Islands-based auditing and assurance firm. Disclaimer: at the time of writing, this author held less than $75 of Bitcoin, Ethereum, and altcoins. USD to plunge towards 1.16 on a break below YTD lows at 1.1704. USD strength to persist against the euro due to dovish ECB. USD has breached primary support at 1.1750. The next line in the sand is 1.1704, which is the YTD lows. This is the last line of defense before a more substantial move towards the November lows near 1.16. If there is one central bank that is content in lagging the Fed as much as it can, it's the ECB. Information on these pages contains forward-looking statements that involve risks and uncertainties. Markets and instruments profiled on this page are for informational purposes only and should not in any way come across as a recommendation to buy or sell in these assets. You should do your own thorough research before making any investment decisions. FX Street does not in any way guarantee that this information is free from mistakes, errors, or material misstatements. It also does not guarantee that this information is of a timely nature. Investing in open markets involves a great deal of risk, including the loss of all or a portion of your investment, as well as emotional distress. All risks, losses, and costs associated with investing, including total loss of principal, are your responsibility. The views and opinions expressed in this article are those of the authors and do not necessarily reflect the official policy or position of FX Street nor its advertisers. The author will not be held responsible for information that is found at the end of links posted on this page, if not otherwise explicitly mentioned in the body of the article. At the time of writing, the author has no position in any stock mentioned in this article and no business relationship with any company mentioned. The author has not received compensation for writing this article, other than from FX Street. FX Street and the author do not provide personalized recommendations. The author makes no representations as to the accuracy, completeness, or suitability of this information. FX Street and the author will not be liable for any errors, omissions, or any losses, injuries, or damages arising from this information and its display or use. Errors and omissions accepted.